talking about rising interest rates, the velocity that the interest rates are rising. Do you think that's going to be a detriment to equities moving forward, or do you just think that this is actually, part of the momentum that we're seeing in equities isn't going to stop just because of higher interest rates?
I don't think it's going to stop because of higher interest rates. I think they're still relatively low. They're starting from such low levels, so they go up a little bit. Really comparing to the growth that's available in the marketplace and stocks, I don't think it's going to derail it.
Yeah, and if you take a look at those rates, kind of negatively affecting the tech sector at this point. But if you look at the liquidity that we've seen in the overall equity market, I think that's a big point here. And I know you've got some charts on the amount of savings and the amount of liquidity that are out there on the street just waiting to get put to work. What are your expectations with this amount of liquidity sitting on the sidelines?
You have, in December, there was $1.4 trillion more in savings than there were in January of 2020. Those dollars are ready to start going to work in the marketplace, and they're starting to spending. There's such pent-up demand. Every client I talk to can't wait until they can get vaccinated to go out there and spend. We kind of look at it as this year is kind of the year of two halves. The first half is going to be driven by the stimulus. There's so much stimulus coming in. That's going to really keep the market, the cash coming in, and that will prop up the market. The second half of the year is going to be from pent-up demand with all that savings and people dying to go out there and spend.
Yeah, and I think if you take a look at what's out there as far as stimulus, the backing of the Fed, and easy monetary policy right now, it's probably, expectations for GDP growth are, I'm hearing anywhere from 3 to 7% in 2021. What are your estimates, and what do you expect going into the end of the year?
We're expecting 5% GDP or higher, and that is huge. And we're expecting another higher GDP next year. So back-to-back high GDP, of course, is coming off from a low level because of COVID, but that's huge. That will really help the economy and the marketplace, because I know one of the concerns is always, we're going to be in so much debt with all the stimulus, but if we can keep GDP and we can keep this growth going this year, 5%, 5.5% or so, and next year as well, that will help the economy quite a bit.
Yeah, and if you take a look at the consumer, retail sales were blowout this past month after falling a little bit in December. But if you take a look at that and the boom that we've seen in e-commerce and your expectations that the consumer's ready to get out there and continue spending, besides that sector in the e-commerce space, what other sectors are you looking at for further growth here in 2021?
We like financials. We think with the buybacks that they really are, they've been so low that they're ready to do very well this year. We like, of course, like you said, e-commerce, but we also like infrastructure. Anything to do with infrastructure. We do believe that there will be a bill coming, and this is an area that will help jobs and will help the economy, and it's much needed. So we really like anything to do with infrastructure. We also like COVID type of stocks that have been hurt because of the spending. We think those are poised to do well this year.